Shalom. First and foremost, I'd like to give all praises and glory and honor to Yahweh Ba'ashem, Yahweh Shai, Ba'ashem, Wakar Kadash. Double honors to the elders for preaching his word truthfully and sincerely. And shalom to the Akim scattered through the four corners of the globe, preaching the word truthfully and sincerely as well too. I say shalom to you Akim out there, and this is a sit-down lesson that I want to bring out of this recent news article from CNBC.com, and this was published by Young Kim, Tana Mitchell from CNBC.com. This was published by them, and this was updated Wednesday, March 22nd, 2023 at 4:17 p.m. And it reads, the stocks slide following the Fed's rate hike. The Dow Jones sheds more than 500 points, and I believe it was 530 points in the red category, 530.42, the Dow Jones crash, as the Federal Reserve Chairman Jeremy Powell made the announcement of the interest rate hike is going to increase to 0.25%, I believe, to continue to tackle the inflation, amending the bank crisis been increasing for the past week or so. So, I just want to add a note to that. It says the stocks tumble on Wednesday as the Federal Reserve continues to hiking rates, while at the same time acknowledging the turmoil in the banking sector could slow the already fragile economy. Regional bank shares led the slide, adding to the stock market's decline, and the drop in the regional bank shares were comments from Treasury Secretary Janet Yellen, who told the U.S. Senate Appropriations of the subcommittee that the U.S. was not currently working on blanket insurance for bank deposits. The Dow Jones Industrial Average fell 530.49 points. Oh, that's the correct number, Salakia, for that. Miscalculated that. And I'm going to read it again. It says the Dow Jones Industrial Average fell 530 points, 530.49 points, or 1.63%, closing at 32,030.11. Right, because they had a previous gain. So after the Feds made that announcement, so the stocks kind of tumbled down as of today, or 1.63%, closing at 32,030.11. And the S&P 500 drops 1.65% to the ending at 3,936.97. The NASDAQ composite declined to 1.6% and closed at 11,669.96. At one point, the Dow was up as much as 201.29 points before turning lower. The S&P 500 and the NASDAQ gained 0.9% and 1.3% respectively at the season high. And this is a data statistic right here, shows the Dow Jones Industrial fell 530.49 in the negatives category of 1.63%. And it says the financial conditions seems to have tightened. Federal Chair Jeremy Powell noted, "We will be looking to see how serious is this, and does it look like it's going to be sustained, as if it could easily have a significant microeconomic effect, and we will factor that Into our policy decisions, he added, the the Fed rate by 25 base points as was widely expected in a statement. The Fed Policy Making Committee said it will closely monitor the incoming information and assess the implications of the monetary policy. Additional to the central bank removed the phrase ongoing increases from its statement. On the bullish side, the latest Fed projections call the just one hike this year, but Powell said in the news conference that the inflation fight is far from over. The Fed's actions today are consistent with our long-held view that the Fed will raise rate to 1.25% and pause for an extending period. Jeffries economist Thomas Semis said in a note bearing an increase in the potential risk with the bank sector. We expected that the Fed will be faced with a very similar policy decision in May, as they will be compelled to deliver another hike. The federal rate hike comes amending the uncertainty of the health of the global bank sector. Earlier this month, Silicon Valley Bank and Signature Bank collapsed with the UBS acquired rival Credit Suisse, a move forced by Swiss regulator to shore up the country's banking industry. Regional bank shares declined on Wednesday following the rate hike announcement and Yin's statement that the Treasury is not considering a broad increase in deposit insurance. The S&P Regional Bank ETF KRE ended Wednesday trading session more 5% lower. Meanwhile, Powell noted that the bank deposit flows had stabilized over the last week after the central bank regulators moved to backstop depositors. To be sure, he also said, I think for now, though, we will see a likelihood of credit tightening. We will know that that can have an effect into the microeconomy. So as of today, as the Federal Reserve Chairman Jeremy Powell made that announcement that they was going to increase the tax hike, the rate hike to 0.5% into a total of 5.125%, while tackling the inflation, because continue the inflation increasing a little bit more higher, and then amending the recent bank collapse as well too, and as it might affect the economy as well too. So we see that as of right now, and I believe it's going to be another meeting of this coming up in May, I believe, to see if they're going to once again increase the federal tax rate hike as well too. But as of now, the Dow Jones crash, the Nasdaq Composite, and the SP 500 crash as of today from the announcement from the Federal Reserve of raising the federal tax hike to 0.25%. So with that, hopefully this sit-down lesson was edifying of the reading of this news article as of March 22nd, 2023. And this article was published by Ha-Gyun Kim and Tanea Mitchell from CNBC.com. As the markets crashed today, as they had a good solid gain today, but within the announcement from the chairman Jeremy Powell from the Federal Reserve made the announcement of the 0.25 rate hike as they continue to tackle the inflation, amending the bank crisis that happened this past week or so. So with that, once again, hopefully this was edifying, this sit-down lesson. I would like to give all praises and glory and honor to Yahweh, Bahashem, Yahweh Shai, Bahashem, Wakar Kadash. Double honors to the elders for preaching His word truthfully and sincerely, and shalom to the Akim scattered through the four corners of the globe, preaching the word truthfully and sincerely as well too. And until next time, I will say shalom.